Good morning, everybody. Monday morning. It is 5 a.m. I have actually been awake all night long trading on the futures. Been a gorgeous fade off all night, very controlled, very slow pace. And today, as a reminder, today is the 1 year anniversary of when the attack took place over there in Israel, which began what you now know as Free Palestine. So there have been warnings issued globally to be aware, possible, flare-ups here and there. So just be diligent if you are going to be out and about. Anyway, we are going into the second week of October. As we know, the history, there has never ever been a red week or a green week in the past 20 years. During this week, during an election month, we are looking for the red close on the week. The red close on the week is not on Friday's close. It's on today's open. So where we open today, and as of right now, we're down at 57.20. So should we be opening at 57.20, the trade would be buying the 57.25 calls, selling the 57.20 calls for Friday, October the 11th. That is the intent of this red week trade. Getting a credit, which I can tell you right now, you're going to get $3. So you're getting 150% probability or 100% profitability on this trade with an extremely high probability of coming true to fruition at full credit. 57.1870 is where we are at now. More significantly, we're just track on here, minus 1% would be at 56.9356. Me, personally, I am looking for a break below 5,700 and a pressure onto that 56.74, 56.18, 56.40 during the course of this week. So I am looking for us to get a proper red week. Past couple of weeks have been very blasé, 26 points, 24 points, 87 points. That's not standard. We had an 8-point back there at the end of August before that big sell down in September. So looking for a red week, looking for a nice move, something down into the lower 5,600 range is what I'm personally looking for. So I'll bring you on here into the charts and get you started because it's going to be quick. So here, looking at SPX on a 5-day. 5 days, where we've been for the last 5 days, which is where we've been for the last 10 days. We are going to be leaving a gap up here, so you want to very obviously have a little bit of respect for that. As of right now, we're down here around 57.20, so just going to make an adjustment for an assumed gap down. We will be opening below the 10, below the 5-day moving average today, 57.0263. That is the significant pivot below 57.11, which I've continued to say everything above 57.11 is risky. Over on to the DIA, getting a nice move to the downside on the DIA. A little bit of a pressure point over here on that 420.72 as we approach the opening bell. But I can tell you, futures, bring it over. Futures are already starting to get a little bit oversold and bringing you onto the Russell 2000. Yes, everybody is getting just a little oversold as we go in here to sunrise over there on the East Coast. So leaving off of DIA, come over onto the QQQ. Again, nice little roll down. We're back down here below 485. We've got a gap to fill up there at 487.32. I'll make adjustments for that later on. But still, the pressure point being 480.40 with that 478, which is what needs to be seen. IWM, as you can see here, nice little roll down that we're getting here this morning, starting to put a little bit of pressure on that 20-day moving average, which again, you got saved by the bell on the 50-day moving average, which will be something that we'll be talking about here in a couple of seconds. SPY, as you see, a little bit of a roll down, fractional 573 close. We're at 570, 569.80 right now. So just a couple of points, that's all. A little bit of a dip as far as getting started into the Monday, and that's all because the VIX has gone up there and reached for that 2102. So in an honest engine's point of view, this now puts a lot of pressure onto the bears. a lot of pressure onto the Bears. The Bears need to get this thing done and start pushing up there into the 24 region. A failure here at 21, which has been standard for the better part of 18 months, would not be good in the short term. That's all we're talking about here, short term. Got a little bit of a gap here to be filled at 22.39. Zoom you out on a little bit of a wider view, and you can see what we're talking about with that gap. That gap coming over here. We want to see something up here pushing into that 23.71. We want to see a close up here above 21.02. Then we know we got something brewing as we head into the week. JP Morgan, you're at the 50-day moving average. And noticing how your 50-day moving average is above your 10, 20, and 5 because this thing has been going absolutely nowhere, as I shared, for a very long period of time. So the moving averages have easily been moving up, which is making it a lot easier to be bearish on this. Now, earnings are on Friday. Now, I'm not jumping into this, and when I am going to issue a 32 trade, because I already said, we're going to do the Friday expiration, October 11th, but we're going to do them on Friday. At least I am, and a few people who are very seasoned, have traded JP Morgan a number of times, are going to be doing that. However, for those that would want to look forward, considering how the chart's set up and with earnings coming up, I'll just point out to you here that October 11th being earnings, your 210 puts, which are right at the money, are at 325. You could get an extra week for 75 cents. You could get the October 18th 210 puts for 520. But zoom yourself out a little bit and go out and look yourself into the post-election, and your 210 puts are sitting at 660. So time is not that expensive, and you can see all the open interest is over here on that big fat 185 at $1.10. Now, how one might look at this and say, the 210s are 660. The 185s are $1.10. I could get 6 185s for the price of 1 210. You're absolutely right. You could. But it could take all the way until November 15th to get down there to 185. It takes that long to get down to 185. Your 210 puts are going to be worth at least $25, where your 185 puts might, maybe, have had a little bit of a pop and actually make a little bit on it, but that's where your open interest is, down there at 185 for November 15th. So 210 puts over there for November 15th on JP Morgan are at 660 as of the close yesterday. So JP Morgan, and I bring you over here onto the Hong Kong exchange. And this euphoric move since September 11th with the fake QE that's taking place over there in China, which retail investors haven't even had a chance to buy into, while the VIX over there in China has exploded up into the 44s. So the day's coming when that will be making a move to the downside. Now, something that a lot of guys are going to be watching today and during the course of this week is going to be Tesla. The reason they're going to be watching Tesla is because Tesla filled this gap, so we can remove that. That, as I said, is your tippy-top 258.94, 242.25 being the magnet. We came right down into that and broke down below it last week. Elon Musk spoke at Donald Trump's rally over there in Butler, Pennsylvania yesterday. Democrats buy Tesla cars. So even though he is going to be rolling out the robo-taxi at some point later this week, there is a little bit of pressure to be put onto Tesla. So anybody wanting to play the upside on Tesla, I would recommend you stick your finger in your butt, you lick it, and if it tastes like chocolate ice cream, buy calls. So enjoy your morning, enjoy everything about what's going to be happening today, and more importantly, take it easy on me. I've been awake since, it's now going on my 11th hour, and we're still 4 hours away from the stock market opening. So take it easy on me today. I've already given you your trade to take for the week for those of you with Interactive Brokers. I will be giving you your trade of the week as soon as we get opened up, and we will be looking for $3 credit, which we will be getting 150% return on when we come down there on Friday. So enjoy your morning, enjoy everything that you got going on, and I will see you in the chat room.